Today we're going to talk about the difference between a Roth IRA and a traditional IRA, or a Roth 401k and a traditional 401k, because the rules are extremely similar, almost the same, whether we're talking about an IRA or a 401k. So here's the deal. When you put money into a traditional IRA or a traditional 401k, you're putting it into a tax-deferred bucket for the future. And that means the money you put in that bucket will grow for however long you leave it in the bucket, and you won't pay any taxes on it as long as it's in the bucket. On top of that, you'll get a tax deduction for whatever you contribute. So let's say you're making $100,000 a year, and let's say you put $10,000 a year into your 401k. If you do that, you only pay taxes on $90,000 that year. Now, when you get ready to take the money out of those accounts, here's the problem. You're going to take that money out and it's going to be taxed to you as ordinary income. Most investors pay taxes at a capital gains rate instead of an ordinary income tax rate. For example, right now, the top capital gains tax is 20%, but the top ordinary income tax rate is 37%. And so you're going to be forced to take that money out at some point in the future. And when you are forced to take it out, you'll pay taxes at whatever your rate will be. Our belief is that tax rates are going to be a lot higher in the future, and that's why it may not be the best idea to take that deduction today and to put that money into a tax-deferred bucket, the traditional bucket. Instead, we think that you may be better off putting that money into a tax-free bucket for the future. That would be the Roth side, whether it's 401k or IRA. Here's the way that works. When you make the contribution in, you don't get any credit for it. They don't reduce anything off of your taxes for this year. You're putting after-tax money into the Roth bucket. But once you have done that, you'll never pay taxes on that money again. So it'll grow tax-free. And then when you distribute it out of that bucket, assuming you follow a few simple rules, you'll never pay any tax on that money when you take it out in the future. So the idea of Roth is the idea of being tax-free for the rest of your life. Now, my belief and conviction is that taxes are going to do nothing but go up. In fact, the Wharton School of Business at the University of Pennsylvania released a study last year, and here's what it said. It said that in the future, the federal government either has to raise taxes by 40% or the federal government has to reduce spending by 30%. 40% tax increase, 30% reduction in spending. Now, let me just ask you this question. What do you think the chances are that the federal government is going to reduce spending by 30%? Yeah, my dad's got a phrase about that. He says something about a snowball's chance in hell. That's the way it is. There's no way they're going to reduce spending. Instead, they're going to raise taxes because it's the easy thing to do. And so what that means for the average working class mom and pop is you need to be paying attention to your tax rate today, realizing that it's probably going to be higher in the future. And the solution to that problem is using Roths instead of traditional. Now, for those of you who already have a lot of money in traditional IRA and 401k plans, got some good news for you. The good news is you can do what's called a strategic Roth integration. The initials for that are SRI. Did you notice that? That's the opposite of IRS. In fact, at the Wealthcare Corporation, we hate the IRS so much, not the people who work for the IRS, just the institution itself. We hate the IRS so much that we've turned it on its head, and we call it an SRI, a strategic Roth integration. When you take money from your traditional account, you move it over to your Roth account, and everybody's allowed to do that. And when you do it, you pay the taxes at today's lower rate. So you qualify to do that. Everybody qualifies to do an SRI, and you'll pay taxes at today's lower rate instead of the higher rate that comes in the future. That's a little lesson on the difference between a traditional and a Roth IRA or a 401k account. It's what we help people understand, it's what we help people make decisions about, and it's what we help people implement here at the Wealthcare Corporation. If we can help you, we'd love to do so. Just reach out to us by following the information that appears at the bottom of your screen. If you like this content, please subscribe to our YouTube channel, What's on Wealth, or go to savingyoutaxes.com for more information.